In this video, traders, we're going to ask the question, hopefully, when is resistance or support more likely to hold? Stay tuned. Hey guys, a very warm welcome to you. Thank you for joining me and if you're subscribed to the channel, appreciate your support. All right, so as I do, all your comments, likes, even dislikes, guys, appreciate you watching the video and giving your feedback. Okay, so what I want to talk about now today is when is support and resistance more likely to hold firm? And so there are a few rules that we need to look for and a few kind of environments where it's more likely to hold firm. And actually the kind of inspiration for this video is right now. We're in lunchtime, we're coming up to summer, it's quiet, we're in a 4-day range, and you know what? Support and resistance is going to likely hold. Because, why is that? Why is that? Let's answer that question. You think about what support and resistance really is. It's a level where price has turned around at previously, i.e. buyers have shut off. If we're talking about resistance level, you know, we've got ones on our charts behind me, perhaps you could see them. We've got resistance level, price has pushed up to it. Buyers don't want to buy anymore, sellers have pushed it down, or sellers have got more aggressive, one or two. There's a little bit of a slight difference in that, and we go into some nuances about how the pressure is applied, but that's by the by. The point is that position, the market's rotated back down. So how do we judge whether it's going to happen again? So the first thing we do is we look at the speed of the market. Is the market all over the place? If the market's all over the place on wild, then it might overshoot. It might still hold, but it might overshoot enough to stop you out if you're trying to stand in front of a train. So watching how big the market excursions are, how strong the candle moves are, how big the kind of daily moves are, 15-minute candles, 5-minute candles, weekly candles if you're on a swing chart, that kind of thing. If they're aggressive, then be careful, because yeah, you do get tons of people say, oh look, it stopped there to the tick, but that's more like luck. Often things are going to break through, and yes, it still may fail, but because it's broken through, that might upset the whole apple cart of people standing in the way and all sorts of stuff. So watch out for the kind of size of the candles, the pressure of the moves, and then also look at the volume. Don't forget, there's very quiet volume like we've got at the moment. It's just chugging away. It's probably the lowest volume we've had in probably a week or so. There's traders who kind of track that very accurately, but I know that it's very, very quiet. It's likely to hold. And even if it doesn't hold, guys, the breakout trade is definitely not there, because it might just chug through and then come back. But the more than likely it's going to hit a big level. It's not going to break through. But does that mean you can trade a counter trend trade? You know, this is the problem we've got as traders. Just because it's not going to break through doesn't mean it's going to fade back off it massively. It might just sit there, give you a few ticks here and there. So it's something, if you decide, it's a commercial decision for you to make with your trading business, really. But back to the topic of the video, will it hold? So if we're in a massive range already and you've got levels, they're likely to hold. If the kind of volatility is low, likely to hold. If the volume is low, likely to hold. If you've got something coming up that's an event like Fed, maybe, likely to hold. If you've got summer coming up, like I've got at the moment when I film this video, likely to hold. Now, this isn't a definitive thing, it's definitely going to hold. It's just a generalization, guys. And this is how we stack up layers of edge as traders, right? We go, okay, well, that's more likely to hold in these conditions or not in these conditions. If I can wrap a strategy around that, then maybe I've got some legs to produce something that's got some decent movement to it and some meat to it. And so that's all we can do. We can just generalize and stuff. So when is support and resistance less likely to hold? Something we didn't talk about, and we'll flip it on its head now, is things like time of day. You know, if we get hammering up to a resistance level on the open and it's just open, then it's not stretched too far, might well blast clean through it. If it's already been open for an hour and it's still quite stretched and it's just tagging it, that's a lot different, right? If we're already at the level that we would expect the market to run to within the first hour, we're probably going to be a bit ambitious if we look for a further extension. Not that say it can't happen, we might be a bit ambitious doing that. Same on a daily chart. And if we run kind of 4 or 5 days strong move in a row and it feels stretched, it feels overbought. Not that I'm a big fan of just slamming short on overbought, you're going to get run over, but you know, hitting resistance at overbought is different to hitting resistance when you're just coming off oversold, right? If you're just driving up, pulling down oversold, then plowing straight through, and you're at maybe a midpoint on something like a stochastic or an RSI, then that's far different to if you're hitting resistance when you've had a good explosion and you're right on the overbought condition on RSI or stochastics. It's a different scenario, right? So you've got to take into account where the market's been, where it's come from. And going back to the initial point, time of day, so open, close, this kind of stuff. End of the day, if everyone's running for the door, whether that's the short side or long side, and there's a support resistance there, no one cares, or less likely to care, because you want out of the position or want into the position, whatever the situation may be. So catalysts, news, time of day, end of day, beginning and morning, and flip it on its head at lunchtime. Those are the kind of things. Same with the end of the month. You've got the end of the month or end of the quarter when there's some adjustments going on, likely to get resistance and support just blasted through because no one's really caring. They've got other things to worry about rather than support and resistance. Normally they might be caring about short-term gains or short-term improvements on price, but the gaming theory is their goal is to improve the book at the end of the quarter or whatever it may be, so they don't care about trying to be clever for short-term price. So there's that. Then you've got things like what's the correlated markets doing? So if a correlated market is driving up to a key level and rips straight through it, silver, gold, for example, what is the other market going to do? Is the other market going to blast through? If one's already gone through cleanly and is rallying off and the other one's coming up to it, it's a bit of a laggard, you might predict that it's just going to carry on through. So there's some things to take into consideration there for that. But we're going kind of down into the depths here of stuff that might not be so relevant. If we're talking about Forex or we're talking about the major indices or the major shares, etc. So there's just some things, guys, to watch out for. When a support and resistance likely to hold, those are the key main things. Volume, volatility, how big are the moves, time of day, how much has gone already. Those are the things you can add into the mix to see if you think the market will hold at a key level or not. Take care. Bye-bye.